Time for Hot Picks. Today we're checking out consumer staples. Our guest has Colgate-Palmolive as his top pick. He says the company is making significant strategic improvements under the current leadership, and he expects improvements going into 2026. We are joined by Filippo Falorni, Director in U.S. Beverages, Household Products and Personal Care, Lead Analyst at Citi. Thank you very much, Filippo. Always great to see you. Colgate-Palmolive, remind us, what do they sell? I know it's toothpaste. Do they sell other stuff as well? And why do you like the stock, Filippo?
Hi, Andy. Thanks for having me on. Yes, definitely. Look, Colgate is mainly a toothpaste manufacturer. Oral care are 50% of their business. So that's mainly toothpaste and toothbrushes. Those are the two big categories. But they also have a different portfolio. So 20% of their business is the pet food business, which is sold under the Hill's brand. And then 30% of their portfolio is under the Palmolive side of the equation. So that's mainly hand soap, dish soap, and other house cleaning products, as well as some other personal care products. So it's a pretty diversified household product and personal care business.
And what are the big changes they're making?
Yeah, absolutely. Look, I think one thing that they are really pushing towards is innovation into next year, especially on the toothpaste side. They've really focused on trying to improve their market share trajectory in the US, where they've been losing share to some other players like Sensodyne. And look, across the world, they're really pushing bigger innovation across different categories. The other thing I would say, look, it's been a period where there's been the pullback at the consumer level generally. You've seen a deceleration, both on the pricing front, because remember, these companies took significant pricing in 2021 to 2024, and then volumes are now a little bit more stagnant. So companies have to find ways to grow and increase their market share. And Colgate has definitely made a lot of progress. They increased their advertising spending, they're increasing the R&D budget. And I do think in 2026, you should start to see some of the benefits from these strategic initiatives, in addition to easier comparisons as you look ahead what they're comping in terms of growth in 2025.
We're tight for time. I'm sorry about that. Procter & Gamble, a classic consumer staples name. What draws you to this stock right now, Filippo?
Yeah, absolutely. Similar to Colgate, right? You've seen a pretty big deceleration in trends in 2025. The stock has also underperformed. P&G remains one of the most defensive names in the group. So it's a very stable company with a lot of growth in their core businesses and stability on cash flow and dividends. Also, similarly to Colgate, they had some idiosyncratic impacts in 2025 that they will cycle in 2026, including inventory destocking in the US in the first half of the year. And so we think 2026 is going to be a better outlook for the company. They also have a new CEO and strategic changes as well that could improve the top line trajectory.
And finally, Celsius. Remind us what their main products are, Filippo, if you would, and tell us what has drawn your attention to the stock.
Yes, Celsius is an energy drink company, so shifting gears to the beverage space. They have three major brands: the Celsius brand, which is the namesake of the company, Alani Nu, which they acquired in February of this year, which is a more female-friendly energy drink, and then Rockstar, which was recently acquired from PepsiCo as part of their distribution deal. So energy drinks in our space is one of the fastest-growing categories. They're attracting new, younger consumers and increasingly female consumers. And the other thing that we like about the stock into 2026 is that they signed a distribution deal with Pepsi. And so in 26, you're going to see Alani Nu transition to the distribution of Pepsi from Anheuser-Busch. And you should get incremental shelf space opportunities for Alani Nu, which could drive at least 40-50% growth for the brand. And the stock has pulled back recently after last quarter, which was below expectations. But we actually think the pathway into 26 is very attractive here.
Logically, could we well see an acquisition of Celsius by a bigger beverage maker?
That's a good question. It's been rumored in the past, potentially, that Pepsi would be interested in acquiring the whole company. This could happen. Recently they signed a distribution deal, which is still a very important step. And they also, Pepsi increased their ownership stake to 11% of Celsius. So there's still definitely some potential of them potentially being acquired by Pepsi. It's just probably the most likely buyer in these circumstances.
And I guess distribution is central, isn't it, in the beverage business?
Absolutely. Distribution is what gets the product in front of the consumers. And as you think about it, like the Celsius brand, which is the brand that they own that has been around for longer, now it reached pretty good distribution in the US, pretty comparable to their main competitors, which are Monster and Red Bull. But if you look at Alani Nu, which is the brand that they acquired in February of 2025, that's only about half of the distribution point of Celsius. So our point is that with the Pepsi distribution, you should be able to significantly close that gap in 2026, and that should give incremental sales, incremental touch point with consumers, and that could drive an acceleration in the sales growth for the Alani Nu brand.
Filippo, thank you very much indeed. Really appreciate it.
Thanks for having me.
Filippo Falorni is Director, U.S. Beverages, Household and Products and Personal Care, Lead Analyst at Citi.